Okay, so you know how we do these deep dives, right? We take what you send us and try to really pull out those key insights so you can get up to speed quickly.
Yeah, cut through the noise.
Exactly. And this time, you sent in some info about this tool from Renago.xyz. It's called summaryScore.
Interesting.
Yeah. So, I mean, what is this thing, right? How does it work? And what kind of edge could it give a trader? Let's see. It's like we've got this video here walking through the features.
Sounds good. I'm always curious to see new approaches to analyzing markets, especially something that promises to simplify
Oh,
things.
yeah, for sure. So right off the bat, this video takes us to the summary score page.
Mm-hmm.
And it looks like the whole point here is to give you this like rapid assessment of market strength, kind of the overall mood and those key technical signals that everyone watches.
Right, right. It's got to be easy to understand at a glance. We're all busy, right?
Yeah, absolutely. So there are these three fields at the top where you'd input your info. First up is symbol, which,
Yeah.
pretty straightforward. You enter the index you want to track. In the video, they're using the Nifty 50 as the example.
Okay, so you're defining your market right from the start.
Right. Then you got the expiry date. But this is specifically for the options data that gets factored in.
Mm-hmm.
So if you're looking at options tied to that index you chose, that's where you'd pick the relevant expiry.
Gotcha.
And then the third one is strike count. And here you can decide how many strikes above and below the ATM price that's at the money you want to include. In the video, they used 5. So for someone who's maybe less familiar with options, what's the significance of looking at those strikes around the ATM price?
Well, those strikes around ATM are where you typically see the most action, right? It's where the most direct expectations about near-term price movements are reflected.
Okay, so it's kind of like the heart of the action.
Exactly. By looking at a few strikes on either side, you're essentially zeroing in on where traders are most actively positioning themselves.
Makes sense. So once you've plugged in your symbol, expiry, and that strike count, you hit submit and boom, you get this detailed scoring table according to the video. This table, it seems like, is really the core of the tool.
It's where the magic happens.
Yeah. It's like this time-based analysis, but it's drawing from both technical indicators, those things based on price and volume, and from the derivatives market, specifically options.
Interesting. So it's aiming to give you a more holistic picture.
Right, right. And they really stress that each row in this table isn't just a static number. It represents a specific moment in time and captures how the market was behaving at that exact point.
Real-time insights. Got it.
Okay, so let's break down those columns in the table. First up, time. Simply the timestamp, no surprises there. Then we've got underlying, which is just the spot price of the index, and future, which is the current price of the futures contract.
So those are your basic price points.
Exactly. And even that relationship between spot and futures, like if futures are at a premium or a discount to spot, can offer a little hint about expectations.
Subtle clues everywhere.
Right. Then we hit total score 80. This is like the headline number, right?
Mm-hmm.
The overall score out of a possible 80 points derived from all the other columns. I'm kind of curious how they weight those scores, but they don't really dive into that level of detail.
Yeah, fair enough.
Next up is the MMA score, which stands for, get this, Market Moneyflow Average. But they're super clear. This isn't your typical moving average.
Oh, so.
So instead of averaging past prices, this MMA is presented as like a neutral point, a level where buying and selling pressure are balanced theoretically. Then the MMA score shows you where the price is relative to that. Above it, bullish momentum, so a positive score. Below it, bearish pressure, negative score.
Yeah, I see. So it's a real-time gauge of who's got the upper hand.
Yeah. Interesting. Right. Then we have VWAP score, based on the volume-weighted average price. You can think of VWAP as like the day's average price for the index, but weighted more heavily towards prices where more shares actually changed hands.
Right. That's VWAP.
The logic here is simple. If the current price is above VWAP, buyers have been more active at higher prices, suggesting they're in control. Positive score.
Makes sense. It's a widely used intraday benchmark. Lots of institutional traders use it to gauge whether they're getting good prices.
Okay, so next we've got the flow score, and this one sounds really intriguing. They mention a complex calculation that looks at the actual money flow in the cash stocks that make up that index. Specifically, they focus on the large cap components. A positive score here means those big players are buying, which they interpret as smart money inflow.
I like that. It's looking for clues from the big fish.
Right. So the idea is that these institutions, they're often ahead of the curve, and their buying activity can be an early indicator of broader sentiment shifts.
It makes sense. They've got the resources to do their research, spot trends early.
Exactly. Now, the exact formula for this flow score, that might be a trade secret. But it's probably analyzing the volume and price action of those large cap stocks to see if there's any significant accumulation or distribution going on.
Got it.
Okay, next we have the P&L score, which stands for profit loss positioning. This one hones in on the ATM options right at, get this, 09.18 a.m.
Okay, that's a precise time.
Right. It's comparing the money flow on the PUT side versus the key all side. A positive score means there was stronger call, writing, or buying activity at that specific time. Why 09.18? Well, in the Indian market, the opening bell rings at 09.15.
Ah, so this is capturing the early sentiment right as the market kicks off.
Exactly. It's looking at how those options positions are being established right around the most actively traded strikes, just after that initial flurry of activity. Now we move on to the PCR score, the Put-Call Ratio score. This one is all about option writer activity. So PCR below 0.75, call writers are super active, and that's actually a negative score. On the flip side, PCR above 1.25 means put writers are dominant, positive score.
Interesting. I've always paid attention to the put-call ratio. It can be a good indicator of overall sentiment.
Yeah, and they specifically say that high PCR above 1.25 is bullish because option writers are smart money. It's a bold claim. Why do they think option writers have an edge?
Well, think about it. Option writers, especially the ones selling options, they profit when the option expires worthless. And to do that consistently, you usually need to have a pretty good sense of where prices are likely to go. They're taking a calculated risk.
So they're essentially betting the price won't move beyond a certain range.
Exactly. Plus, writing options often requires more capital and a deeper understanding of risk compared to just buying options.
Okay, that makes sense. Then we have the OTR score, the option trend ratio. The formula is total PET open interest minus total call open interest. And this OTR value is compared to its 10 and 30-day EMAs, the exponential moving averages. So if OTR is above both those EMAs, it's a positive score, below both, negative.
Okay. So it's factoring in those moving averages.
Yeah, and they also say that the greater the distance from those EMAs, the stronger the implied trend. Again, reflecting the collective view of those option writers, but over a slightly longer time frame.
I see. So it's trying to get a feel for the bigger picture in terms of options positioning.
Exactly. And maybe for someone newer to this, can you quickly explain open interest?
Sure. Open interest is basically the total number of outstanding options contracts. These are contracts that have been traded but not yet closed out or expired. It gives you a sense of how much participation and conviction there is in the market for that particular underlying asset.
Gotcha. So by looking at the difference between PUT and call open interest, and then using EMAs to smooth out the data, you're getting a sense of that prevailing sentiment among option traders.
Precisely.
And finally, the last column, the support and resistance score. This one is all about volume in the option chain. The strike with the highest volume for OTM out of the money call options is seen as a strong resistance level. And similarly, the highest volume OTM put strike is seen as support. So it's using actual trading activity in the options market to pinpoint those potential turning points.
Right. Volume in the options chain can be a very powerful indicator. It shows you where large numbers of traders are putting their money, and that can often signal areas where prices might stall or reverse.
So now that we've gone through all those individual pieces of this scoring table, the big question is, how do you actually use it to make trading decisions? The video offers some practical advice here. They highlight that when you see positive scores in flow, PNL, and PCR all at the same time, that can act as a green light for potential entry points. What do you make of that?
Well, those three scores, flow, PNL, and PCR, seem to be targeting what they consider smart money signals. You know, that money flowing into those leading stocks, the early positioning in those APM options, and the sentiment of those option writers. When they all align, it does suggest a confluence of bullish sentiment from those potentially more informed parts of the market.
Okay, interesting. On the other hand, they advise that if the overall total score is low or showing red, that's a sign to be cautious. Maybe even think about hedging, because it suggests higher uncertainty or potential weakness.
Yeah, that makes sense. That total score is an aggregation of all the individual scores, so if it's low, it means the signals are either weak, mixed, or leaning bearish.
Right. In that environment, you definitely want to be more defensive.
Absolutely.
And the video concludes by saying that this summaryScore tool is all about giving you a real-time snapshot of market mood. It could give you an edge, whether you're an intraday trader or more focused on longer-term positions. So they're suggesting it could be valuable for different trading styles.
Yeah, I mean, that real-time aspect and the focus on early sentiment, those definitely cater to the intraday crowd. But the inclusion of the option trend ratio, which looks at trends over a longer horizon with those EMAs, suggests it could also be useful for those taking a longer view.
Right. So to sum it all up, this deep dive into summaryScore from runalgo.xyz reveals a tool that's really trying to help traders cut through the noise. It combines those classic technical indicators with data from the options market to give you this consolidated view of the market's current mood.
Hmm.
The idea is that this summarized info can help you make smarter trading decisions and hopefully gain an advantage.
Exactly. It's about taking a lot of data points and turning them into something more easily digestible.
Now for you, our listener, think about how a view of market sentiment like this, one that blends technical analysis and the world of options, could change your approach. What other indicators or data points could you add to this kind of picture to get an even richer understanding? That's something to ponder and explore. Thanks for joining us on this deep dive.
Great discussion.
Always a pleasure.
Until next time.
Yeah, see you then.